Is the fear of the stock market holding you back from making money?
Check out this week's Money Minutes. All right, it's this week's Money Minutes. Ryan Payne, Courtney Dominguez of Payne Capital Management. We're here at the Fashion Institute of Technology, outside, almost spring weather. And this is Money Minutes. Every week what we try to do is just give you some common sense financial advice that you can use for your planning, investing, get you on your path to financial freedom. And today we want to talk about why is the stock market so intimidating and why you're really missing out on a great opportunity to create wealth over your lifetime.
Now, in our last video, we actually went through some of the headlines and just how scary the stock market can sound when you're just listening to some of the data that's out there. But what a lot of the headlines or news is not talking about is the income side of investing. And really what that comes to is dividends. And that's what we want to talk about today, is the importance of those, what they are, and how you can benefit from that.
Yeah, so there's a lot of ways you can create wealth, and you hear a lot about real estate, right? And real estate always sounds like a much safer way to invest, but the reality of it is investing in stocks is very much like investing in real estate.
Right.
Yeah.
So the whole idea of investing in real estate is that, okay, I want to buy a house and I'm hoping that 10 or 15 years from now it's going to be worth more than it was when I bought it, and that's called appreciation. But on top of that, you can get income by having renters living in that house, and that gives you constant income in the meantime, so you still have something before you're selling your house 10 or 15 years from now.
Yeah, so the same thing. If you own stocks, they pay rental income, and that's really the key. You know, we talk about, is the market going up or going down? It doesn't really matter in the short term. It's about collecting that rental income over time. And the beauty of it is, just like if you owned a rental property and you were collecting your rents, those rents would go up over time. The cash flow or the rental income from your stocks goes up over time as well.
And even better, let's say you have this cash, but we don't need it right now. We're not retired. I'm not dependent on this income. So what you do with it is you reinvest it. Let's say you have that rental income coming in. Maybe you take that and you decide to buy a second property, and then you get more income from there, and then you use that to buy a third property. You can do the same thing with your stocks, where you just keep reinvesting it. Now you're going to own a lot more stocks over time, which in turn are going to give you even more income, and it's this compounding effect over time. That means when you do need it down the line, you can have a really consistent income stream coming to you when you're not working any longer. You don't have that paycheck coming through anymore.
So why we know that stocks do just as well and maybe even better than real estate, depending on the comparison over time, are we so afraid of the stock market? And the reason is, think about this. You can't see the price of your house every single day. You know, so you buy a property, you're not looking in the newspaper or on the computer, probably more apt these days, to see what the price of that is. Your investments in stocks trade every single day, which add another emotional component to investing in the market. It makes it harder to say, I'm just going to sit on this and hope it does well over time.
Exactly. Yeah, our human emotion is easily one of the things that makes it hardest to be an investor and make some of those decisions. Because if you see it going up and down, it's a lot more of an emotional reaction than with your real estate. I don't necessarily see how much it goes down, or it's easier to ignore because I know I have a longer time frame.
Yeah, so think about this, right? If you knew your house went down in value and you're still living there, would you panic out and sell your house that day? You probably wouldn't. You probably say to yourself, well, maybe in a couple years it'll be worth more money. Same thing with your stocks. You're getting that rental income the whole time. If it goes down in value, your stock portfolio, so what? You're still getting your rental income, and sometime in the future, most likely it's going to be a lot higher than where you started, and that's really the key, and that's how you can really create wealth with a stock portfolio. Okay, so let's give you a hypothetical situation, Court. Let's just say I have $100,000 in my wallet over here, of course, all in cash. Just kidding. In the bank account, and I want to invest it. It's 2004, and I decided I'm going to buy a high dividend portfolio of stocks because I watched this video and I think this content's really good. Over that time frame, I'm getting $3,500 every single year in that portfolio. If I would invest that $100,000 into a high dividend paying stock portfolio back in 2004, 15 years ago, what would have happened, Courtney? That
same portfolio would be paying you about $10,000 a year now, and it would be worth about $300,000. So you're getting more income and it grew in value.
Okay, so point is, you have a great opportunity to buy a portfolio of stocks that pay you rental income, keep reinvesting it 10, 15 years down the line. You're gonna have this awesome cash flow producing investment that's worth a lot more. So instead, you have your money working for you as opposed to you going out there and having to work for the rest of your life. That's a pretty good deal.
Now, if you're listening to this and you're thinking, wow, this makes a lot of sense, but I know that I get really emotional when I see the stock markets going up or down, that's really one of the biggest benefits of having an advisor and somebody who can take the emotion out for you and just explain why you're invested for different periods of time and looking at over your time horizon. Now, we do offer complimentary financial reviews. So if you click below, you can fill out a questionnaire to see if you qualify for one of those financial reviews, which we'd be more than happy to do. Also, click below, you can subscribe to our weekly content to stay up to date on everything you guys may need in your financial lives. And as always, be bullish.